going to make some introductory comments and flag a couple of new developments or new products that we've been putting out in the public domain since Matt joined. So for all of you probably know, but RK Equity is a business I founded 23 years ago. We've been in lithium, for over 15 years. Lithium Americas was the first company, the clay, what is now Thacker Pass. Was promoting that, as far back as 2008. It's been a few years since we did a Spaces. We're doing so on Labor Day, following a sunny summer for mining equities of almost all types. Gold, of course, but many critical minerals have been catching a very substantial bid. Um, Pre-revenue mining equities in my career, which has been a major focus of mine, as well as emerging markets, where a lot of mining equities are found, are the most risky investments in the world's capital markets. And they require a market environment when risk on sentiment is rife. And 5 years ago, at the height of COVID and following massive monetary and fiscal stimulus, and ahead of Tesla Battery Day in September of 2020, we were in a massive risk on period. It began then, which was given a further tailwind after Biden was elected, and he implemented, all of his policies like the IRA and the bipartisan infrastructure law, et cetera, CHIPS Act. And while Trump is trying to reverse a lot of that, the IRA, which has proved a headwind in the U.S., for the EV battery and the solar and wind narrative, Trump's agenda of deregulation and tax cuts and reshoring rare earths and other critical minerals is providing a major tailwind and risk on sentiment again, in the sector, for mining equities. This is reflected in, MP Materials, the metals company, not only their valuations, but, the massive liquidity that has come in to those names, but also uranium, via his nuclear promotion. And I mentioned gold, Bitcoin, even companies like Talon Metals, a nickel story in the U.S. Is catching a very substantial bid, despite nickel prices not doing so well. SPACs are back. Chamath Palihapitiya just launched one. That's just another kind of data point on risk on. And every company we're talking to wants to list on a U.S. exchange now because they want to tap into the U.S. general investor. Not everybody will be able to do that, but if you have a U.S. asset or North American asset, or if you've somehow managed to get listed in the U.S., everyone wants to tap into this. I've started checking stock twits and Reddit again, for the first time in several years. So we wanted to do this Spaces today to engage more with our followers on X and to discuss a lot of what we've been talking about on Rockstock channel, where we are in lithium, where we might go from here. I also want to talk with rare earths, assuming Matt gets on shortly. But we're mostly going to talk about lithium. And a lot of people said, a lot of people, their philosophy is that I'm happy to miss the first 20 to 30% upside, before buying into lithium, because, there have been a lot of false starts. Well, the scoreboard, which we published overnight, shows that on a 1 month, 3 month, and year-to-date basis, many companies are up 20, 30%, or more. So that time has come to pay attention. And now that the summer's over, I think you're going to get a number of investors. We're getting a lot of inbound, asking, which stocks we like, and I want to talk about some of those, in this Spaces. Rockstock channel was among the first and the most prolific to promote the bottom in lithium equities. We had on Ken Hoffman first, and then Matt Fernley in early June, before the Fast Markets conference. And then YJ Lee and Chris Robb, followed in our bull versus equity long debate. We've had UBS has come out now. Joel Lowry has, called the end of the lithium winter. Since then, But there's still some debate. Daiwa, I got a note which is sounding a cautious note. Goldman's, still cautious. And those are bullish indicators in my view that bearish names still have opportunity to become, bullish again. So, and there's been a lot of debate, and YJ is going to, he's very focused on the demand side, but a lot of the focus of the narrative on getting bullish is supply side cuts, in particular out of China. So before we begin, I just want to point to a couple of publications that I mentioned, the scoreboards we published, but Matt Fernley has started a research blog on RK Equity's website. So I want to point you all to that, blog.rkequity.com. The first one he published was something called Minor Metals Major Upside, talking about a number, not only rare earths, but other minor metals that he thinks will do well. He published today a lithium focused one, DMS, dense media separation versus flotation. And we'll talk a little bit about that, when evaluating hard rock stories in lithium. He's working on another one, the valuations of conventional brines versus hard rock, and another one, a rare earth primer, how to value that. So I'd encourage you to visit RK Equity's website at rkequity.com, and actually register your email there if you'd like to get our Lithium Ion Bull newsletter, the next one of which will be published next week, but also to check out Matt's blog there, regularly. And on X, please follow us at RK Equity Rocks, at Matt_Fernley, at Lithium Ion Bull, and at Rodney Hooper 13. And go to YouTube, Spotify, and Apple Podcasts to subscribe to Rockstock channel and hit the notification bell to receive all of our videos and podcasts. And on LinkedIn, Matt is prolifically writing there, so follow him, as well as Rodney and me, as well as RK Equities corporate LinkedIn profile. So and I think finally, many speakers have pre-agreed to join this conversation, and we're going to welcome them and have that conversation. If you're not one of those, but you have a question, please post it to X on the RK Equity Rocks timeline. You could use the timeline that references this spaces, and we'll try to get to those questions. It's Labor Day in America, so I don't have much else to do today. I expect this conversation will last at least an hour, but it could go 90 minutes, or even 2 hours if you guys have interest. So with that intro out of the way, let me see if Matt has managed to get in here. I don't see him. So Rodney, why don't you, I guess, start with a few thoughts, and then we have a few speakers here, YJ, Jody Dahrouge, Rob Weir. Want to make this kind of, invite you guys as much or more than, we're speaking.
Yeah, great.
Rodney?
I think, hi, can you hear me, Howard?
Yep.
I think, I guess one of the things that has stood out for me is how quickly the price has moved with the sort of amount of volume that's been taken off the market, or the potential for volume relative to what some players have suggested the oversupplies or inventory levels are. So I think that points to possibly the market being in tighter balance than some have thought, which has kind of been our thinking, and with strong demand. But perhaps YJ, maybe you can chime in on a comment of what your thoughts are on inventory. I know you follow this, and perhaps where market balance is really at.
Okay, hello, hi guys. Thanks all for coming and thanks for inviting me. Okay, on this topic of inventories and supply cuts. So I think inventories are sitting at a normalized level. I wouldn't say they are either too high or too low at the moment. I think towards the end of the year, there's always a greater need for more inventory because that is the peak season for Chinese manufacturers and Chinese demand. And generally, we see car sales in China and globally spike up towards the last 3 months of the year, and that's what we're heading into right now. So, a cautionary word about using inventory levels. We have to be careful about looking at absolute levels versus days in inventory. So, in a market where the demand is growing at anywhere between 20 to 30+% per year, the days in inventory calculation is shifting very quickly. So, some of these charts we see out there in the public space that have inventories on the left axis and number of months on the right axis, you can't use that, all right, because the calculation is wrong for the future years. And that means that in a growing demand market, if the demand is growing by 25% per year, let's just say, then inventories need to grow by the same 25% a year just to keep the same number of days of inventory in stock. And that, I think, will help a restocking cycle pretty soon. Now, the other thing that's quite topical today is the theme of Chinese cutting back supply. And here, even though I'm bullish on the lithium market, I want to be a little bit cautious. I think some commentators are getting a little bit ahead of themselves, perhaps, in saying that there's a lot of supply that's going to be cut out of China. I don't think that's going to happen. The only supply that's been taken off the market so far, for sure, is CATL's Tianxiawo mine, and that is not 6% of world supply, contrary to what some have said. That 60,000 tons per year or even more capacity is a stated goal. It is not the current capacity. It probably runs at about 30 on a run rate basis, 30 plus on a run rate basis, and that's merely 2 to 3% of global supply. It's not small, I grant you that, but it's not 6%. And there's also been talk about the lepidolite mines in the Jiangxi area being taken out of production because of license issues. I don't think that's necessarily going to happen. So what's happening right there is a very shall I say procedural, very regular renewal of license and all the usual things. I think those will go through, and that production probably remains online. So I'm not looking for Jiangxi cuts, further lepidolite cuts as a price support or price trigger event. That said, even though that might sound bearish, but overall, I still think that lithium demand is growing much faster than people think, and it's the demand side that we should be looking at, not these supply cuts. It's in China's long-term interest for them to be producing from their own mines, and I don't think they will relinquish that. So that's my take on this issue for now.
YJ, on the demand drivers, any updates since we last spoke with you? I mean, CATL and BYD have just reported their results. I saw CATL stock go up a lot, and there was an article in Bloomberg, I think, referencing one of its suppliers. I was in South Africa over August and stayed at a very wealthy friend of mine's house, and he had two Chinese ICE vehicles in his driveway. And I saw lots of Chinese, cars there, and the EVs have started to come, even into South Africa. So, yeah, any thoughts on any updates since we last spoke?
I think EVs are well on track for a surprise. This year, lithium prices have been really low. Battery prices have fallen really quick. Car prices have been adjusted down in an ongoing price war. And what's happened is that for many models, comparing to their ICE counterparts, EVs are actually now even cheaper upfront. So that's happening, especially going for the mass market right now, and that's why we are seeing EVs start entering these, shall we call, less developed markets much quicker than people think. And of course, BYD is sending their cars all around the world in their own car carrier fleets. So each of those car carrier vessels carries about 7,000 EVs on a single trip, and those are going all around right now. Well, we'll look for the numbers to confirm it, but I think EV growth is above expectations on the current run rate. Now, the other thing that's really interesting is I just made a post on this I think half an hour ago. The story is about BESS. So The Economist just ran a story that called BESS Clean Energy's Next $1 trillion business. And they're saying that grid scale batteries are taking off at last. They used Bain and Company, the consultants, to forecast the market growing from $15 billion in 2023 to 200 to 700 billion in 2030. So that's a growth ratio of 13 to 47 times. And that's not even accounting for the falling battery prices. So the installations would be the real gigawatt hour installations could be even faster than that. So if we take what we 2023's best market, which was 120 gigawatt hours. Iola, I know you're there. You could correct me on this number if I'm wrong. Now, if we multiply this by anywhere between 13 to 47 times, that implies a 2030 market of 1.5 terawatt hours to 5.6 terawatt hours. And of course, the low end of this, the 1.5, is our base case forecast here at Arcane Capital. And that 1.5 terawatt hours of BESS basically consumes almost all of last year's lithium supply. So the BESS story is now starting to go mainstream. People are now finally waking up to the idea that, oh gosh, there's this huge opportunity both in business and in mining to drive this source of demand. And I think that's definitely happening as we watch.
Okay, great. Thanks, YJ. Matt has now joined. Originally, when we had conceived this last week, we were going to start it at 8 o'clock, and he didn't realize that I moved it a half hour earlier. So that's fine. Matt, could you say something? Just make sure we could hear you.
Yeah. Hi, everyone. Sorry I'm late.
No problem. So yeah, I just made some introductory remarks, Matt, and YJ was the first speaker. Rodney asked him about inventory levels, and he talked a bit about supply, and then, which he doesn't expect, major cuts, but talk, more on the demand side, and his bullishness there. So Matt, I wanted to start this conversation more, on the rare earth side, because I think we're going to spend a lot of time on lithium. So Matt, why don't you just, I guess you don't need to like introduce yourself too much. I think many of our viewers and listeners know you already, but you did post a blog I mentioned on the DMS first flotation and the minor metals one, and I flagged that you're going to have ones coming out, on brine versus hard rock, conventional brine versus hard rock, as well as kind of rare earths. So why don't you start with just rare earths, like a little bit, what's happening, in that market, how you view it, and I think Chris Berry, you're on here, of all the people that I'm looking at that have that I know have rare earths expertise. You're among them, so would love for you to join into that if you wish, on the rare earths part of the discussion.
Yeah, well, I mean, sure. There's a lot happening in the rare earth space at the moment, as those of us who follow us in detail know. Really focused on sort of two geographical areas. Obviously, China has dominated the rare earth supply space for a long time, but the US has rather thrown the cat among pigeons with the MP Materials deal, which which was announced recently, which is basically setting up MP Materials as a US rare earths champion and investing specifically in the US government investing specifically in the equity of that company, and also providing funding for that company, not only to expand upstream, but to go into the midstream and downstream as well. And very importantly, providing a price floor. And one of the big issues in the rare earth space over the last sort of 10 to 15 years has been the dominance of China, with sort of 80 to 90% of upstream rare earth production, and between 95 and 100% of rare earth processing capacity. And that has allowed the Chinese basically to manage the supply of rare earths and to some extent to manage pricing as well. Over the last 4 or 5 years, we've seen quite strong production in rare earths from China. A lot of that due to imports of rare earths into China from Myanmar, from heavy minerals concentrates from Australia and other countries as well, which has allowed the Chinese to overproduce and push the rare earth prices down. Many people in the market believe that that was an attempt to push Western production of rare earths out of the cost curve. It seemed to fail, and sort of round about the mid part of last year, we saw a change in direction of travel from the Chinese, starting to trim rare earth production quotas, and starting to sort of pull away from this overproduction. And we also started to see NdPr prices in China start to pick up a little bit. Fair to say that NdPr prices in China have now gone ballistic after the MP Materials deal, and we're starting to be, come towards a level where a lot of Western where rare earth development capacity now is viable to develop. So we are at a very exciting time in the rare earth space. Just maybe talk a little bit briefly about the rare earth space. I think there is the feeling that all rare earths are created equal. They very much are not. And there is a very substantial differentiation between what we call the heavy rare earths and the light rare earths. And then there is another subset of rare earths called magnet rare earths, so neodymium, praseodymium, dysprosium, and terbium. And these are very much the sort of focus of the most rapidly growing demand, whereas elements of the heavy rare earth space are also in focus for defense applications, which obviously is a growing area of focus in the industry. I'll shut up now, let Chris jump on and give his views.
Well, Chris hasn't, I see he's on here, but I don't know, Chris, if you are going to join as a speaker, but he's not listed under the speakers here yet. So maybe he's in a place where it's difficult to speak. So I'll just say or fill some airtime here, see if he joins. If not, we'll switch. But just on I wrote about the MP Materials deal and the lithium ion bull, which was the first time I wrote about it in 5 years. I when it went public. Oh, here's Chris. Okay. Chris, you there? There you are. I can. Matt Fernley, by the way, your sound is a bit soft. If while Chris is speaking, if you could figure out a mic or however you're speaking to make it sound better, that would be great. Go ahead, Chris.
Sure. Yeah. Thanks for the opportunity, and thanks for doing this, Howard. I admire you for trying to do this on 7 a.m. or 7:30 a.m. on a holiday morning here in the U.S. But nevertheless, it means if you're here, you're a real believer in the thesis. So Welcome everybody. Anyways, listen, I'll be mercifully brief. I mean, I think Matt made a lot of great points, and I think his view of the rare earth space is on target. Maybe just a couple of higher level comments on what's going on in the space. Look, I'm based here in Washington, D.C., and I can tell you that while there's a lot of excitement about this deal between the Department of Defense and MP, there are a lot of folks that don't like it. There are a lot of believers in the free market, right, that don't think that the U.S. government, whether or not it's the Department of Defense or another group, should be involved in picking winners or picking national champions. My person, and we can argue about the structure of the deal and the capital and the floor and so on and so forth, but my personal view is that without this kind of a deal, without some sort of higher level involvement, there's just no way for us to build any kind of a sustainable, competitive rare earth magnet supply chain ex-China. And I think that's just kind of the reality of the situation. Linus was working with the Department of Defense to build a heavy rare earth separation plant in Texas. My understanding is that has been halted. And then last week, Linus came out and said, they're going to be raising, I think, 750 million Australian dollars. And so, you can look at that a couple of different ways. Number one, I think you can look at it and say, wow, this is terrific. Clearly, at Howard's point, risk on is not just limited to lithium, it's there in rare earths as well. But obviously there's clear investor appetite for Linus to expand their capacity as well. I think that, we're not going to know whether or not this MP deal was a true success for a number of years. And I think we want to kind of have our expectations in line in terms of what to expect. I mean, if we think that this MP deal is going to sort of push China or Japan out of the market or take, significant market share, I would argue it's not. But I think it's a good start. For those folks out there who are red-blooded capitalists, Adam Smith, free market types that don't like this deal, I would argue that, there is a relatively robust history of the U.S. government getting involved in the private sector, although not so much to build industrial capacity. It's more to save companies. I mean, if you go back to 2008, the U.S. government got involved and actually took warrants from General Motors to save the automotive industry here. The difference there was, it was a much higher level deal. There was no, price floor, cost guarantee, anything like that. So, and it was a much more shorter term deal. I mean, I don't think the government was looking at holding General Motors warrants or stock indefinitely, as it looks like they may be doing here with MP. So, look, I'm optimistic. I can tell you that, and I'm sure, there are some companies on this call that have been spending more and more time in DC. I would think that, you're likely to see more deals in the rare earth space, in the magnet supply chain space that are funded by, could be the US government, could be the EU, simply because, as we all know on the call, mining and separation refining is one piece of the puzzle, but obviously there's a whole other industry that is obviously dominated by China and to a lesser extent Japan in terms of magnet manufacturing and recycling. So I think, I don't know if you're going to see more upstream mining deals. Obviously, like I said, the capital is really flowing in there, and I think that's a good thing. But I would argue that you're going to see more on the magnet manufacturing and recycling side, and I think that's a good thing because that is a nascent industry that we're going to need to compete. So anyways, I'll stop there, but those are just some initial thoughts.
That's great, Chris. You're reminding me you're in DC. Just heads up, like Matt Fernley is going to be visiting me in Bull's Lair next week, and then we are going we are going down to see Hyperion X's facility in Virginia, and on the way back, there have been a couple of other people we've been speaking to in DC, and we may pass through DC maybe next. We'll talk offline, Chris, but it would be good to see you next week. But Hyperion X is something, and I want to talk about stocks here. I see Paplo has been on here, and he's been supportive of Hyperion X, as has Rodney and me, from when it was Tau Commodities and then Hyperion. This is a titanium story as well as a conversion of a new technology, out of the Department of Energy for titanium metal products, and they have received substantial Department of Defense money, as has MP. And the people behind titanium, Hyperion X, are also behind Brazil Rare Earths in Brazil, and a story that's a pre-IPO at the moment. A company called America Rare Earths is one we've been invested in privately that want to flag for investors, a few potential, they've done a lot of private rounds with some very similar investors that are in Hyperion and Brazilian rare earths, including Gina Reinhardt, et cetera. But Matt, since you joined RK Equity a few months ago, you flagged to me not only Brazil, but I think the ionic clays. So there were some other names like Ionic Rare Earths, Viridis, Lindian, have come on my radar as in the last few months, in the lithium space. If you have any thoughts on any of those before we switch to lithium.
Can you hear me better now?
You're louder, but still a bit muffled.
Okay, I don't think I can do any better than that. Hopefully it's clearish. Is that any better?
A little better. Are you talking on your phone or through your desktop?
No, through my desktop.
Okay. After you talk now, why don't you try logging in through your phone? It might be better that way.
Sure. Okay. Yeah. So I mean, I think for a long time I've liked the ionic clay deposits. The reason is because I talked earlier about how rare earths is about magnet rare earths and it's about heavy rare earths. In the ionic clay deposits, you find a greater weighting in the rare earth assemblages towards the heavy rare earths than the light rare earths. And I think there is this issue in the rare earth space and I'll be writing a quite a detailed blog about this coming up. But a lot of people tend to look at total rare earth content, and in my view, that's wrong. It's really about the economic rare earths. So, most rare earth deposits have a very high weighting of light rare earths like cerium and lanthanum. They're effectively worthless. So it's irrelevant in economic terms how much cerium and lanthanum rare earth deposits have. It is very relevant how much magnet rare earths and heavy rare earths they have. So it's important that people look at deposits from the point of view of neodymium, praseodymium content, and potentially neodymium, praseodymium equivalent content. And that's why I tend to like the heavy rare earths. You find that a lot of the lighter, the hard rock rare earths, they're not very good for neodymium, praseodymium. And if you look at the processing techniques, the amount of capital intensity, the cost of extraction of these projects, they're just not economic at these levels. So it's very important when you're looking at rare earth projects that you look at the economically extractable rare earths and not at the total basket. And that's my reason for liking the ionic clay projects in Brazil primarily, but there is a very interesting one in Africa that you mentioned, Howard, ionic rare earths. And I think that that is an area that investors should be looking on. There are very few hard rock assets out there that have enrichment in the key rare earth elements, and Lindian is one of those that we do highlight, that we do like. But keep an eye on those ionic clay and make sure that the secret magic word in there, ionic, is included. There are clay rare earth assets. They are not as interesting as ionic absorption clay rare earth assets. So just be a little bit wary about management teams talking about just clay rare earth assets.
Right. It's interesting that in lithium, clay is sometimes a dirty word, but in rare earths, it seems to be popular. Is there any comment on that?
Yeah, I mean, definitely so. I mean, you know, in rare earths, which is a very sort of chemicals heavy space, you know, we like clays. They have been extensively mined in China. You know, when we talk about you know, lithium, we go with the KISS principle: keep it simple, stupid. We go for plain vanilla processing techniques. Similar situation in rare earths, plain vanilla processing techniques. You know, these assets have been developed, have been mined successfully in China over time. So we know when we look at a clay deposit, we're not reinventing the wheel.
Okay. Interesting. Chris, I just sort of picking up on your points on you know, picking winners, right? So yeah, MP, you know, it's equity, but you know, the Department of Energy Loan Programs Office, you know, through debt, you know, lent money to Lithium Americas. That's a picking winner. So I think we're okay with, you know, this is not a free market. You know, with China is not, you can't just be a libertarian, you know, free market when you have an actor like China, which is very obviously and repeatedly manipulating the markets for these. So I don't personally have an issue with picking winners. Uh, but and I think the deal as structured with MP was very creative, with the warrant upside and the shared upside above certain prices, you know, and certainly the price floor. I guess the question I have, a couple of questions, like why are you know, is there a demand driver for rare earths outside of the military, uh you know, similar to what we're experiencing in lithium, you know, led by batteries, and with robotics and drones and other applications? People are saying, um like a few years from now, that these demand drivers will result in you know, an excess demand of these products, and therefore a rise in NdPr and other, you know, rare earths prices. Rare earths outside of NdPr, you know, and the other two, are very, very niche, small markets, hard to play. I think like antimony, you know, germanium, gallium, some of these, you know, the administration may be mentioning them, and maybe their stocks will go up, you know, or scandium, but these markets are really, really small. I think in rare earths, you have some similarity to lithium, and you have two producing companies, that are speaking every quarter in the public, MP and Linus. In a similar way, you have Albemarle and SQM, and previously Livent talking to the market. Um, uh, but the you know, is the market for rare earths going to grow very significantly, and therefore, uh, rare earths prices going to rise in a significant way, as we expect that to happen in lithium, you know, and therefore, you know, the Brazil rare earths, the America rare earths, the Ionics, the Viridian, you know, the Lindians, you know, is there room for all of these, right? Or is this really just if that doesn't happen, you know, is it then just like MP and Linus, you know, just a couple of winners? Do you have any opinion on that, Matt and Chris?
Look, I mean, rare earths are I think the future of rare earths and demand is inextricably tied to technology, and I think Howard, you hit a lot of the main demand drivers, right? Yes, it's robotics. Yes, it's drones. It's consumer technology. It's EVs. I mean, as we all know on the call, right? Rare earths are everywhere. The issue is you just don't need a lot, in terms of actual kilograms to do, you know, to have quite an effect on an end use. And so you're correct. I think you sort of mentioned or implied that, gosh, you know, I'm not sure how big the demand from the Department of Defense or the US government is. And, you know, it's not big, right? I mean, it's, if rare earths are a 300,000 ton a year market spread across, you know, all 15, 16, 17 rare earths, I mean, the DOD is, I don't know, are they 10, 12, maybe 15,000 tons a year, if that? So, you know, a bet on rare earths and a bet on a lot of those companies making it, you know, to the promised land is a bet that, again, companies like Apple, companies like Tesla, you know, a lot of the companies that roll off the tongue will see demand for robotics and EVs and so on and so forth continue at their current pace. I don't think we're going to know if we're going to need more than a Linus and an MP for probably the next few years, simply because MP and Linus are so far ahead in terms of their strategy and about vertical integration relative to some of these other players. So, you know, then it becomes a play on, well, where do we think rare earth prices, again, for some of the heavies are going to be in the next 6 to 12 to 18 to 24 months? And I would argue that's how you're likely to make money, based on some of these earlier stage players that you mentioned, whether or not it's in the clays. So, you know, it's still early days. I think there's a lot of reason to be optimistic on some of the juniors, but I would not be relying on government led demand for rare earth sort of halcyon days, right, coming down the pipe. I think you're going to have to think very carefully about the pace of technology, how rare earths are used, think about substitution, think about technology, and how that advances to try to get a handle on what the ultimate market is going to look like in 5 years. So, and I do think this is kind of a 5-year move.
Okay. Matt, I would love for you to chime in again, but I'm also noticing Christopher Williams of Adamus Intelligence is a speaker here, and I thought of you, Christopher, as you know, more on the lithium side because you've been posting a lot. But Adamus is as much or more known, you know, for its rare earths coverage, and is having a major conference this month in a few weeks in Toronto. So, Chris, do you cover the rare earths? So can you speak to what we've been speaking about here, or do you just want to restrict your comments to lithium?
Hi everyone. Yeah, thanks, Howard. Yeah, that's right. We do have a conference later this month in Toronto on the 22nd, 3rd, and 4th. Personally, I have taken a bit of a view on ionic rare earth clays, but the extent of my research is mostly lithium. But yeah, certainly happy to partake in the conversation on rare earths. I did enjoy Matt's comments early about you know, picking winners and sort of being aware of some things to be aware of in the industry, and I think there are some things that you got to be careful about with regards to ionic rare earths, in particular. Whether or not they pass the ionic absorption clay test. It's actually a very simple metallurgical test that can be done on a deposit to determine if it's actually ionic. So that's, if a management team has not done that early in their development, it's definitely a pretty big red flag. Another thing, if you're sort of just early in your research into these types of deposits, is, you know, they are very low grade. A lot of the technology is in China, but I think there's one private company in Brazil that is currently ramping up. I sort of see it in a similar light to like DLE and lithium. There's sort of like an Aramet equivalent out there. They're sort of still yet to reach commercial production, I believe, but they're called Serra Verde. They're definitely worth keeping an eye on, and you know, that could be like the technical de-risking catalyst for many of the hopeful Brazilian developers. So definitely something to keep an eye on. Yeah, I think that's about it from me.
Okay, Matt, do you have further comments? And Jody Dahrouge, I want to invite you to comment here as well. I don't know if you cover and have thoughts on rare earths, but you have very significant views on lithium, which we want to get into shortly. But Jody, if you have any rare earths comments, please feel free to speak up.
Thanks, Howard. And good morning, everybody, for everybody on the West Coast. You know, one observation that we've made is a lot of a lot of exploration dollars currently are flowing into US-based projects. The key, I think, MP Materials. Sorry, I keep cutting out here. Can you hear
Yeah.
me? I think the key is going to be exploration um, for the heavy rare earths, looking for projects that are within alkaline intrusions, something that you don't find a lot of in the Western world. We hear a lot about ionic clays and extraction of heavy rare earths, but in high quantities, they don't typically occur in carbonatites or more.
So you broke up, Jody. Oh, all right, we lost him. Matt, you have any comments while we wait for him to get back on?
So I'm trying to log in on my phone, but you're stuck with me on this desktop connection, which isn't very good.
It's very you're loud but quite muffled. So maybe
is that any better?
a little bit, yeah.
Okay. Yeah, I mean, I think that I agree very much with Chris. I think the other thing to make the point about on the development of the rare earth space is there is this very much this thought that the US government's put this money in, and we're going to have magnet production out of MP materials in the US. These are very chemistry heavy approaches. These products are very, very pure products. You talk about in lithium, 2.939 purity. In rare earths, you're probably talking maybe 4.9s, 5.9s purity. And it's very difficult to bring these up to the required level. When Linus was building its assets, it took them 4 or 5 years to get to the targeted recovery and purity levels that are needed. In the downstream sort of part of the industry. So I would urge people to just be aware of the fact that development of this space is not going to be a straight line. It's going to go up and down. There's going to be a few stub toes along the way. And I think investors have to be aware of that. These processes are pretty difficult, really, from the context of the mining industry, from the context of the chemicals industry, and there will be some failures and there will be some delays, and obviously that has the potential to impact share prices along the way. So, people just need to be aware that perhaps I don't think that the sector is being sort of as correctly risked as perhaps we at the moment.
Okay, and on that point, I'll make one last comment on rare earths before we switch to lithium, and that is, what you just said. A lot of bumps in the way for Linus. I participated when MP went public in the SPAC mania in the summer of 2020. I remember I had invested right at around 11 or 12 bucks above the SPAC thing. Then it went to 50. And I made some money on that, but everyone always told me like Linus was a better company or relatively undervalued. So I bought Linus as well. Then I sold my MP and I've held on to my Linus like the whole time. And I was like lamenting for the last kind of like 3-4 years. Why didn't I also sell the Linus? Right. Because it had peaked back then. And I've held it, the whole time as my one play other than this private American rare earth story that will hopefully go public soon. But it's recovered, right? So it speaks to like what is your time horizon in these markets, investing in good management teams, good assets, but can you weather the cycle? There are a lot of another company like that I've held all the way up, all the way down, and now has recovered, a fair bit, but not anywhere close to all-time highs, is Talon Metals. But then there are others, and I want to pivot to this because a poster, ex-poster, Dragon's Breath, Matt just commented on your DMS only versus flotation here, and he was mentioning Critical Elements. Rose Project, Critical Elements is one of those stocks I've held all the way up and all the way down and hasn't recovered. It's one of these kind of, it was permitted in Quebec. It's small, lower grade, but a lot of people thought this would kind of get in production or get financed, but hasn't. So Tom Woolrych has joined here. He called Azure early in Western Australia, another geologist. He has been, would love his comment. I'd love to talk about in general Quebec, and Ontario hard rock within the lithium narrative and the scoreboard. Quebec had some heyday. The merger of Sion and Piedmont is now happened. They're selling product to Tesla and elsewhere, but overall, and Jody Dahrouge is now going to join in as well. If we could talk about various lithium types, but let's start with hard rock and maybe with this piece, Matt, if you could look at Dragon's Breath comment here that it's not only DMS only that matters. Core lithium rush may have gone too fast too soon, and then they're fixing their project. But yeah, have a look at that and any comments about that. Let's have a discussion. I think Matt, Jody, and Tom and Christopher Williams are all very well placed to talk about this, and Rodney too. So why don't you start, Tom, because you haven't spoken yet, and just kind of say hello and let us know what you think.
Yeah, sure. Thanks for having us. I missed the start. It would have been good to hear Chris's comments on rare earths. I mean, I guess to put a pin on the end of, I did have some thoughts as the guys were talking. Like, rare earths is super opaque. It's controlled out of China. What if Trump tacos again, right? And then we start doing deals with China again, and they start providing us with all the rare earths we need. Happy days, revert to the mean. So that's kind of one of the reasons I've always avoided it, and just cautionary tales from people like Sustainable Dude, investors like Panda Pete, who've kind of gone deeper on the sector than me, lost money, and then they there's the odd good one you can invest in, like WA1, but yeah, more losers than winners. Quebec. The other question was about Quebec hard rock, Rodney.
I was Howard here. I was just
Sorry, Howard.
yeah, no problem. I know you have a lot of opinions. We've talked about Q2 and some other, from a geological basis. You're a geologist, like I mentioned.
Right.
You found Azure early, promoted that. I think you were involved with PMET, as is Jody Dahrouge. So just in general, talk about, we're in a market environment where well, not yet, lithium's not
back.
lithium's not super hot yet,
Mhm.
and in lithium the prices have rebounded a little bit, but they're still not yet an incentive price for a lot of things. So I think there's a lot more room to run. I just feel like TSX listed and also Canadian stories are underappreciated
I
by
agree with that.
investors.
Yeah. So I mean, there's kind of a simple reason for that. That no one believes that the Canadians will permit a mine like Patriot or like Cisco. I personally don't believe that. I think there's a process in place that the companies need to go through. It will take time. You need to do all the environmental and then you'll get the permit. The gold guys and the people that are operating lithium projects, they've gone through that permitting hell and gotten it done. So I guess that's the cynical Australian would say, fuck, why would I invest in Q2 when I could just buy a Pilbara or a Liontown or something, which is kind of right at the start of the cycle. Just buy the beaten up producers, but the levers are really going to kick in when people start believing in a lithium comeback. The levers are really going to occur in the explorers. So that's what's got me super excited about Q2. That and just the phenomenal drill results. Jody will back me up. The hits that are coming out of Cisco are world class. Only seen maybe 3 or 4 other projects globally, and Chris will back me up that there's massive engineering advantages when you've just got a big fat blob of pegmatite. You don't have to worry about country rock dilution. You don't have to worry about strip. There will be some heterogeneity within the ore body, meaning different parts of the ore body will look different, different grain sizes, different spodumene percentages. But it's super early days, and certainly the 3 met samples that have been processed are nowhere near representative of the ore body. So yeah, that's sort of the bird's eye view, the step back view for me at the minute.
Perhaps I'll just jump on and come back with some comments on the Dragon's Breath comment on my article.
Actually, Matt, before you do that, do you want to lay out what you wrote in the article, and then you could articulate what Dragon's Breath is commenting about the article, and then you could comment on his comment.
So the article was basically written off the back of the Q2 release, where they basically said that the initial test work on the ore body implied that it was amenable to DMS treatment rather than flotation, and it's really intended as a introduction to investors in terms of why do we care about DMS and flotation, and really the big issue here is that there's a very substantial cost differential between DMS and flotation. So if you look at DMS, dense media separation, what we need to do is we need to grind the ore body down to sort of millimeter size, and then we use effectively physical means to separate the core spodumene from the rest of the ore body. In flotation, we grind, in DMS, we crush the ore body. In flotation, we grind the ore body down to micron size. Now, we don't call pegmatite assets hard rock for nothing. They are really hard rock. They are basically igneous material, which is baked at very, very high temperature, and they're very crystalline. They have a very high work index, which means that basically if you're going to grind those down to micron size, that requires a lot of energy, a lot of power, and therefore a lot of cost. And that's really what I'm focusing on in the article, saying that if you have to invest in flotation, that means that you have to put a crushing circuit on, and it also means that you have to put a grinding circuit on. And you have to put a grinding circuit on that's going to take your ore body down to micron sizes, like 100, 150, sometimes 200 microns, as opposed to, the DMS only work. For instance, the Sigma's assets in Brazil, that's a 10 millimeter crush size. If you compare that to the Bécancour mine, where you're talking about a 200 micron grind size, that's a very, very substantial difference. And it's a substantial difference in costs, both at the CapEx level and at the OpEx level. And that's the point that I'm making in my note, that from a point of view of investment in a project, if a project can go to DMS only, it's likely to have a much lower CapEx bill and a much lower OPEX fill. Now, Dragon's Breath is coming back, and they are saying that this isn't the only issue to look at with regards to DMS versus flotation. And they're making the point that it's also very important to look at recovery. Now, it is very important to look at recovery. I would 100% agree with that. But I do disagree with some of the comments that Dragon's Breath have used in their article. They refer to the Rose project, which uses flotation and hits 87 to 90% recovery. Now, I know a lot of projects in the early days of lithium did look at recovery levels that high. To be fair, in actual production assets, we've never seen anyone get anywhere close to that sort of recovery level in a hard rock asset. So straight out, you have to have some concerns about whether that is actually a viable, commercially viable recovery level in a lithium asset. Then they are obviously making the point that Patriot, when they first did their PEA, they framed it primarily as a DMS asset for a faster startup, but then they added flotation to boost the recovery levels, and indeed, that is correct. But I would also mention, then they reference the Finniss project, which is included in my analysis, the core lithium project in the Northern Territory in Australia. And they mentioned that they also targeted DMS only, but they struggled. Now, actually, they struggled because the ore body wasn't suitable for DMS, because they rushed to get that project into production, and they were mining only surface material, whereas the bulk of the high-grade resource on that project is actually the underground resource. So, for instance, Core, which is going for a restart on that Finniss project, is going to primarily target the underground resource, which has a much higher recovery, into a DMS-only processing solution. So, you know, we obviously, as we write articles on the sector, try to be as simple as possible. By being as simple as possible, sometimes we leave stuff out that we except we know, but we sort of don't include it in our article. So I personally disagree with Dragon's Breath's article. I am aware of all of the issues that they bring up. But my view would be that, for instance, if you look at Sigma, which brought its asset into production with a DMS-only solution, it was a much lower capital intensity solution. It's a much lower OPEX solution. And therefore, I think a DMS-only solution is a much lower OPEX and CapEx solution. And if you get the right ore body, then it can be very viable. As a couple of the commentators have mentioned, the Cisco metallurgical results, it still is very early days. So there hasn't been any geotechnical testing on the resource. They haven't done a PEA. It's a composite sample. You know, it's not a bulk sample, a detailed bulk sample testing. So we are, you know, very early on in the development of that asset. But the initial data looks very positive.
Matt, I agree with you. Are there examples of people starting with DMS and then treating the what is it, the fine rejects? I guess the tails, you could call it, and then floating that down the track, or does the material degrade too much?
We have seen, you know, some producers look to add flotation in the processing plant later on, definitely. And you know, in some cases it does, you know, slightly amp up the recovery, but obviously it's not ideal, because when you go and, you know, design a processing plant, you design a flow sheet for a specific solution, and then if you go in and you alter it at a later date, it can mean that you don't get the recovery ramp up that you were maybe looking for, and also it can mean that you don't get the cost impact that maybe you were looking for. But yeah, we have seen some producers go in and add flotation at a later date, And you know, also this comes around to the complexities of the ore bodies. So, you know, some ore bodies are like stringer type ore bodies where they have like quite thin pegmatites, and they might have large contact zones where there's, you know, material which gets baked around the contact zones, has lower recoveries, higher iron content. So it's, you know, it's not a, as we all know, it's not a one size fits all solution.
Yeah. Every time I hear a comment about the grain size, I think about the photo of Neil lying next to the single spodumene crystal that was longer than him. So, but you know, it's really early days, and there will be coarse and fine within the ore body.
Jody and Christopher, I would love for you to kind of join this, maybe not so much the conversation on DMS for flotation. I think we've covered that now, but just in general, I think Christopher, you put out, I think you first really came on my radar when you pointed out the capital intensity of winsome resources, you know, within Quebec being the lowest. You know, if they had exercised that option with Renard, they've walked away from that, you know, for the time being. But you did benchmark, you know, the Quebec projects, you know, against each other. Jody, I mean, you've been involved with PMET as well as with Cisco at Q2 and maybe some others. But I'd like to just have a discussion about Quebec and to some extent, you know, Ontario. There's Frontier there, you know, as a source, you know, and Rio Tinto now. I noticed, by the way, at Benchmark Minerals, their November event in LA, Paul Graves will be speaking. And this is in line with what I had previously heard that by the end of this year, you're going to see an articulation of, you know, Rio's lithium strategy more pronounced. So I'm very excited to learn more about that and hear specifically what he has to say about, you know, Abuchi and Nemaska assets, because the conversion at Nemaska, I think, is you know, reasonably, you know, far advanced. The conversion at Tesla is far advanced. You know, Sayona Piedmont are selling into that. So like the future of, you know, hard rock, you know, in North America, in particular in Quebec, you know, and then Ontario, views on how that will evolve, and you know, which projects are, you know, we mentioned critical elements is permitted. You know, North American Lithium has Moblon. You know, there's Winsome. You know, there'll be a, right now the market has written off a lot of Quebec, where they trade at very low valuations. PMAT still has a very significant, you know, valuation and as a, you know, a real asset. But as you raised, there are some questions on permitting and the like. So yeah. So Christopher, Jody, would love for you to chime in with your thoughts, noting that you may have, you know, some biases yourself.
I think on the with respect to permitting, I think this is really overplayed in the market, how long it could take to permit. Quebec, for instance, has some tremendous advantages. Every exploration dollar you spend currently, you're going to get 40% of your money back in the form of a physical check the following year. So on the cost side, it's really, costs are really lower in Quebec than a lot of other jurisdictions in Canada. Um, Patriot is rushing ahead and going to file their feasibility study this September, and that's to get them into the queue for their EIA. And once, of course, you have your EIA, then you're at the you basically have your mine permit. This deposit was discovered in 2021 vis-a-vis drilling when we pulled those first few drill holes of 100 meters. 100 meters at about 1% lithium each. And if construction conceivably could start in 2027, that's a pretty quick time frame, 6-7 years from discovery to actual construction. I'm not saying that's going to happen. I don't know exactly, you know, how the permitting process is gonna play out. But people have to remember Renard and James Bay Lithium project, for instance, they went through that EIA process, which normally takes say 24 months for a gold mine or a typical mine in Quebec, but they went through that process in 10, 12 months. And I'm hearing both the federal government and provincial governments in Canada, particularly the Quebec government, they realize the importance of their political green energy narrative, and they're speeding along things that usually took months. And in terms of an application is made or a question is put to the permitting people, and they're turning these things around at rapid paces. So I think Patriot is really going to surprise the market and how quickly it receives its mine permit. Um, back to Cisco and Q2, I think people have to recognize what this round of metallurgy was. Sorry to segue from one to the other, but the metallurgy at Q2, I believe there's 3 samples or 4 samples given. Those are 4 50-meter or 3 50-meter intervals of drill core that were quartered and sent to the lab. It's really early days. I mean, Cisco is such a massive project. And it's very much an exploration stage project. And someone had commented on the heterogeneity of these deposits. And, when you're dealing with something that is potentially 2, 3, 400 million tons, where do you start? I mean, at this point, these drill holes are 200 meters apart. They're just beginning this year process of infill drilling to try and convert their conceptual exploration models to a resource. So, Cisco is very early on. Very attractive project, obviously, given the scale of it. But if Patriot has set the path, a rapid path to development from when you have a resource built out, um, I think they will provide a lot of advantages to Cisco in terms of following that same pathway. Um,
Okay,
so
Christopher, yeah, go ahead, Jody, continue.
no, go ahead. Did you have a question?
Well, I wanted to see Christopher to chime in because he's looked at this or Quebec hard rock pretty well.
Yeah, I think on the question of Quebec hard rock, I mean, it's definitely worth talking a lot about because when you look at all of the resources that have been delineated in terms of projects that are sort of ready or not at various stages of being ready and then being investigated, Quebec and North America in general are, a large proportion of the spodumene resources worldwide that have the potential to enter the market. On its ability to enter the market, I agree with a lot of the comments made about permitting. I think it's largely overblown. But I think it's mostly centered around the missing middle, which is how does the spodumene get refined? And to that, just the proximity or lack thereof of Quebec resources to refining capacity is a huge issue, and therefore it sort of necessitates taking refining into your own hands. And on that, there really hasn't been some good precedent with the failures in Western Australia. We've had some successes with like the South Koreans, for example, but I think the jury's still out, and financiers would like to see some more data on the technical de-risking of spodumene refining in the West. So we've got several near-term catalysts for that, and I'm actually quite constructive on that. I think a lot of the issues identified in Western Australia were sort of engineering issues that have been largely understood at this point. And so for specifically to Quebec, we should be paying close attention to Waibuchi and its Bécancour refinery. We won't really understand how that's going until next year, well into next year probably. But also a sister or brother project of that is Covalent's refinery in Western Australia, because they're essentially the same engineering team, Hatch engineered. So if you should take a close look at the Mount Holland Kwinana refinery in Western Australia to get a good sense of how things are likely to be de-risked in Quebec in the future. But yeah, a lot of resources there, a lot of great names have been mentioned so far. It's got a lot of potential, and then obviously it's got, and what should excite investors is, its direct link with downstream end users in North America and Europe as well. So,
Christopher, those were very helpful comments, because yeah, Covalent chose to go a conventional route, and Nemaska did. Tesla did not. They're going, I guess, the Metsu Ototech, but I think, it's not rocket science. I think it should work eventually, right? If Tesla, Elon Musk should be able to figure it out. The Lithium Universe guys have a plan to use the conventional technology. So I think you're right, and new technology is being used, as you mentioned, in Korea with POSCO. So I think a lot of the, there are learnings in the failures, and China does not have, exclusive, processing it just takes time and effort and money, and well-capitalized players will make it happen. But you're right that there is a headwind based on the prior failures, and this missing middle is essential to be sorted out. But again, going back to the Trump administration, and and he's leading thought process elsewhere in the world, processing, not just upstream mining, is being emphasized, right, with the MP deal, with price floors, I think, for magnets or buyer or first resort. Maybe that's a wrong terminology, but I think processing is recognized to be critically important. And then when I look at North America and I think about lithium resources, as much as there may be some permitting issues in Canada and there may be some processing technology, questions, this is still keep it simple, stupid, keep it spodumene stupid. Those processes are probably less technically risky than what they're, a DLE brine and a Smackover is attempting, or a what the sediments are, with Lithium Americas and some of the others, or the Salton Sea. But those projects are getting financed, right? And if I look at, from a North American perspective, Tom Cotton just visited, Standard Lithium, Exxon and the oil companies will not go hard rock, it seems. They're focused on, oil and gas. But are the best assets, but like there's a competition here. Like there's enough lithium in North America to be a major exporter for the world. So the question in terms of picking winners as investors, listening to this, we could all love Q2 and Patriot and the hard rock, assets. But if you look at market caps, the market caps for some unconventional names are better in some instances. So do you have any thoughts, Chris, Tom, Jody, YJ, anyone else here, on that dynamic? Because we are it's a high risk sector. There are inefficiencies on the scoreboard. Matt, I'll have you speak as well on the brine versus hard rock, and then there's also the hard rock in North America versus hard rock in Western Australia, debate. So that was a lot of questions embedded in that, but feel free, Chris, Tom, Jody, YJ, Matt, Rodney, to opine.
Chris made a great point with respect to, the advancement of processing in Quebec. But back to one major advantage that Quebec has, if, for instance, you're utilizing electric kilns for your processing, there's no cheaper electricity prices on the planet than in Quebec. So on a commercial scale, if you can get electricity at, say, 5 cents a kilowatt hour, that probably compares to, I'm speculating, about 30 cents a kilowatt hour in Western Australia or elsewhere. Uh, that's a big advantage. Another big advantage, I'll segue back to the heavy rare earth point I was trying to make when my phone cut out. Not all rare earth projects are equal, and people have to be cognizant of when they're looking at investing in a rare earth project of the mineralogy, because there's only really been, besides the ionic clays, there's only really been three minerals that historically have been processed for rare earths, and that's monazite, bastnasite, and xenotime. A lot of times you'll look at people who report rare earth projects and heavy components, which are incredibly rare in North America for some reason. Um, and they'll report things such as alunite, which are incredibly refractory and almost impossible to produce rare earths out of economically. But the wake up call in terms of the lithium pricing, and to segue back to Quebec, but not all spodumene projects are created equally as well. And I think Patriot has shown that with that rather dramatic discovery of cesium. Um, and a lot of projects, a lot of LCT pegmatites have these potential for byproducts or co-products that could dramatically reduce the costs. Cesium, potentially gallium. Gallium is an interesting one because it doesn't really occur in high concentrations anywhere worldwide. It has a real high propensity for aluminum, so often will occur inside chemically within the spodumene. So in that processing cycle of converting spodumene from one form to another, it may be possible to extract gallium and have a nice critical metal byproduct, co-product. And of course, tantalum is one that's been produced at Pilangora for years and other places worldwide in terms of a co-product. So that'll help lower the cost curve for potentially for a lot of Quebec-based uh, projects or uh, which appear on surface to have higher concentrations of tantalum and cesium that I've seen elsewhere. Oh, did I cut out again?
No, that was great, Tom. Thank you. I'm sorry, Jody. Thanks for that. Tom, do you have? I made some comments just broadly about North America. Lithium types.
Yeah.
You're an investor at Deutsche Rohstoff. I know you're more a hard rock guy, but you've been presented opportunities in sediments and DLE brines. So how would you? One, how would you think about it? Like geologically, where would you prefer to play? But also just looking, as an investor politically, what do you think might happen? Right? Like, will Exxon, Coke, Equinor, somehow, disrupt the Quebec narrative?
So, look, a lot of the DLE stuff's still unproven, right? So, and there's different types of DLE. There's brine, which is a higher grade, or milligrams per liter. Then the stuff that's just sitting in the oil basins that you're referring to. So I guess you can kind of separate those out to TUFs, almost completely unproven. Argentinian, Bolivian, Chilean brines will certainly have cost advantages, especially if DLE can be proven. But what that leaves me with is, really there's a super well established route for getting spodumene to 6%, or unfortunately these days, just above 5%, and getting that material to China and then converting it. So that's kind of where I've made most of my money in the past. Geologically speaking, the pegmatite ore bodies are super simple. They're literally just volumes of rock. So the way I work is I get drill data, stick it in Leapfrog, and I could pretty quickly call if a spodumene ore body is going to be tier 1 or not, and then make my decision based on that pre-resource. So yeah, it's a little bit of my bias from the past. It's a little bit of skepticism around DLE. And then, one more point, Deutsche Rohstoff were looking at building a lithium converter in Germany. And I was talking to our material scientists, and I said, well, can't we use, one of the European mica lithium concentrates, or can't we use lepidolite, or something? This was during lithium boom crazy days, and they were like, mate, there's lots of spodumene in the world. You can concentrate it to 6%. You can transport it. It's super inert. The tailings, the waste product, can be used as a sort of a replacement for gypsum. Germany was looking at having a gypsum shortage as the brown coal mines were coming down. Most of German domestic lithium comes from coal. So there was going to be advantages in having a waste material that could be used in building products. What really killed that project, our lithium conversion project in Germany, was energy. So the material scientists were telling me fine spodumene. The Chinese have proven the route. I mean, this even goes to discussions with people at OEMs. And you've seen VW's investment via PowerCo in PMET. Even they prefer it. They're looking at 2030, 2035. Where are they going to get their lithium for their batteries? And they're not really willing to bank on unproven tech. So yeah, that's why my bias is towards spodumene. Now, globally, jurisdiction, I don't really care. I mean, I invested in Lithium. AVZ was before my time, but I probably would have invested in it. So yeah, for me, it's just about the quality of the ore body, and they occur in Archean belts. So wherever there's Archean rocks with big pegmatite ore bodies, I'll have a go.
Okay. Thanks for that. Unfortunately, I wanted Andy Leyland from SE Insights to chime in here, but I think he's dropped off. But Andy, if you hear this, come back on. They just had a webinar, and they have promoted. Actually, Chris Perry also had a drop off. He's going to be speaking at an Arkansas summit, on the smack over. But SE Insights was forecasting something like 600,000 tons of lithium carbon equivalent to be coming from DLE type activity. In the webinar, they said a fair bit of that might actually be Albemarle and SQM, so applying DLE technologies to conventional brines to just get better recovery rates. But I do believe that they were optimistic about some of the advanced DLE projects like Aramet. I think Christopher, do you have opinions on DLE and YJ? Maybe you have some as well.
Yeah, I can just quickly jump on DLE. I guess a lot of the comments made thus far, I completely agree with in terms of its where it's at and its technology readiness. And obviously you can get super into the weeds with all this stuff with the different types of DLE, but there's naturally going to be a hierarchy of different types of DLE that are going to be more likely to be economic than others. But it's not as binary as whether or not it's got good grades or not, particularly with pure play greenfield DLE like what Aramet are doing you know, you could run into issues of variability of the brine feed. You know, DLE, as I understand it, with these large tanks, finds it difficult to produce consistent battery grade material if you have like appreciable levels of fluctuation in your in impurities and lithium grades as coming into the plant. So these are things that perhaps you know like the oil field brines could potentially have an advantage in that regard. So there's lots of technical parameters that are not yet fully understood by the market, I don't think yet. And, you know, there's not much data out there yet. So one can be forgiven for not understanding that. But yeah, and I think in the North American context, I guess to your question, I'd completely agree with Tom. Keep it simple with regards to, you know, getting reliable battery grade products to market. Yeah, and I'd take spodumene with its missing middle conundrum today over a much more speculative technology, and I would definitely throw in Nevada clays into that mix as well. I mean, I think those may be largely precluded from the future market construct based on economics alone, as we saw with Thacker pretty much only being able to come to market with heavy support from government. But yeah, we'll see what happens with that. But I think in terms of like proportion of volumes in the future, I think you're much more likely to see spodumene playing a larger role than something like oilfield brines or clays.
All right, thanks for that. So look, we've been going hour and 40 minutes here, but there's more people in the space than there was at the beginning. I think we peaked at 96, I saw. We now have 87. A few people that I wanted or had agreed to speak have kind of, I don't see here, but Rob Weir of Lithium Royalty Corp, if you're there or hear this or could come back, would love to hear, you know, your opinion. And there's a number of people here. Feel free to raise your hand if you want to talk or, you know, ask us anything, opinion about any particular stock. I see my friend Stu Crow is there. Don't be shy. Feel free to pitch whatever story you want to pitch, and then we can, you know, have a conversation about it. You know, Steve Driscoll, another old friend. You know, feel free. Otherwise, I'll make a few more comments, and Rodney, feel free to chime in as well. Jody, you mentioned low cost energy of Quebec as a highlight. I think that's highly relevant, and Rio, you know, the aluminum business is huge in Quebec because of the low cost energy. So I've always been talking, you know, will Rio, which is one of the biggest producers of aluminum and titanium, you know, and iron ore in Quebec, you know, really follow and watch Rio and what they deploy, you know, hopefully in Quebec. They've spent most of their time talking about you know, their Argentine assets, and then they made some acquisitions in Chile. But I would just flag that, like, that's critically important, you know, low cost energy and it's clean energy. Okay, Wayne Hines, you've taken the bait to speak. We've not met before, so if you could actually give us a little bit about who you are, and you know, happy to listen or answer any questions you may have.
Sure. Okay. Yeah, my name's Wayne Hines. I'm an IT guy, so I'm not even a geologist or anyone technical within your area of influence, so to speak. So here really as a small scale investor, but try to rapidly upskill, but coming at it from a perspective of, you know, obviously you bring skills bring skills from project management and a few other skills into the area as well that make you look at things in a little bit of a different perspective. Where I was hoping to bring some or promote some discussion around the podcast content was was just knowing, obviously knowing the basics, because the economics of the links between, the stock prices and commodity prices. And then just saying, well, okay, who's really getting the lithium demand forecast and methodologies correct? Okay, in all of this, right? Now, I actually shot through a link to you just with a couple of words on it, but I'll just read back off that if you prefer. So most here want to know commodities and hence stock prices shall rise, and for lithium, that appears linked to demand shocks. Demand forecasts and forecast methodologies are as many as there are analysts with an opinion. Clearly, not all are correct. Some are even grossly incorrect. Okay, so questions are: what is considered the best practice for measuring demand in near real time? And then subsequent to that, questions around Carbia, for example, their H1 2025 battery gigawatt hour battery output, BYD with their January to July 2025 metrics, or SMM for where they've published LFP and lithium hydroxide published data. Are they considered reliable? And also we can look at within that EV sales numbers, and then obviously we can calculate average kilowatt hours for EVs being the bulk of the lithium consumption. So I guess I'm posing an open question here, but I'm saying if all the previous data sources are accurate, then a likely conclusion is that the LCE demand for 2025 is well above what's predicted by many analysts. So leave it at that point there and just ask for comments for people with expertise in the area.
YJ, you've done the most work on demand, so I would suggest you take that first, and then maybe Matt.
All right. Well, actually, what I've said about demand hasn't changed. I think I spoke a lot about EVs and BESS at the start of this podcast. I don't think I'll repeat that. I think we are headed towards 2030 demand of 4.6 million tons. A lot of people don't believe that simply because it is so far outside of what Albemarle and some of these other industry players and consultants are saying. But I do believe that when we forecast, we have to look at adoption rates and try to think exponentially rather than linearly. And where things are going right now, things are growing exponentially. Just look at BESS, even EVs, they are growing quicker than expected. Now, the other thing that I haven't spoken about today, which is a theme that one of the key pillars of my Fast Markets lithium presentation, the Raging Bull lithium presentation, was electric trucks. So that's one source of demand that is actually coming online very, very quickly from China, and nobody else in the market is talking about it. What's really happening right there is that in the Chinese space, the heavy EV trucks are now represent about a fifth of sales, more than that. They are now, the penetration rate is already up to 21-22%. And this is the market that sells uh, 200 now they're headed for about between 160,000 to 200,000 heavy EV trucks this year, more than doubling on last year. CATL a few months ago came out to say that they want to drive this market to a 50% penetration rate in 3 years. That is huge, all right? And what's really come out in the last week as well is this Huawei mega truck charging station. Was it Sichuan or I forget which province it's in. But what I made a post on it. You guys can check my profile. What's happening there is that this one single charging station has 126 charging points, and some of them are really fast chargers. I think 40 of them are really fast chargers that can get the truck going in 5-10 minutes. So what Huawei can do in one point, one location in China, it can replicate across most of China quite easily. And so this is really, really happening in China right now. Trucks are going electric, and there's a clear underlying reason for this. Simply because truck prices are now becoming competitive with diesel trucks. I think there was a New Zealander YouTube channel that talks about EV trucks. They are great, and the most recent one is cheaper than a diesel truck. I think it came in at about $200,000 or so. And that means that these high-use vehicles, trucks being the most high-use vehicles in the industry, they will get their payback much, much quicker. And therefore, there's a huge economic incentive for fleet operators to switch to trucks, electric trucks, I mean. Lower upfront cost, lower operating cost, and lower maintenance costs. Can't beat it. And so based on our forecast of the truck demand, I think if we are talking about a third of the truck market globally going electric by 2030, that could account for about 600,000 tons LCE, which is half of last year's market. And so I think that trucks are a really, really big theme that more people should pay attention to. That's it from me for lithium demand. I just want to go back quickly to what we were talking about DLE earlier. I was trying to jump in. I think someone said something about oil field brines. That is actually one place where I'm quite certain we as investors probably shouldn't go. This is based on my understanding of how DLE works. You are concentrating that source brine into 1,000 or 10,000 times. And oil is, I was an oil and gas analyst before this, right? Oil is sticky, oil is corrosive, and what happens is that any oil content in your brine, in your source material, will coat and foul up your entire DLE machinery and your consumables. So your OPEX is going to be really, really high if you have oil in the brine. And therefore that requires a huge amount of pre-treatment to purify all that out of the brine before you even put it into the DLE. So just putting on my investor hat here, I would not invest in a oil field DLE project. Yeah, that's for me. Thanks.
Okay.
Maybe
Unfortunately, yeah.
I'll jump in and I'll try and answer Wayne's question. So thanks a lot for the hospital pass, Wayne. It is really difficult modeling lithium demand. I've been modeling lithium demand since around about 2018 now. And maybe I'll just try and give you a little bit of an indication of how my model has evolved over that time. So when I first started modeling lithium demand in 2018, the major driver of lithium demand was consumer products. Consumer batteries. And obviously EVs was coming up very fast, and I had a global EV model that looked at EV sales on a global basis, i.e. the number of sales. It looked at the battery size, it looked at the chemistry, and it looked at the split between cars, 2 to 3 wheelers, commercial vehicles, etc. And then over time that grew. So we get, stronger demand coming through from different countries, and we get stronger demand coming through from different types of vehicles, and we get stronger demand coming through from different applications. So now my model has BESS in it. I don't really model consumer products to any great extent. And my EV model is split between cars, 2 to 3 wheelers, commercial vehicles. But it's also split regionally as well. So I now model for the US, I model for Europe, I model for China, and I model for the rest of the world. I have to model the split between battery electric vehicles and plug-in hybrid electric vehicles. I have to model the battery size for both of those products, the number of sales, and the chemistry split. So you begin to get an idea of how complex the demand modeling is in this space. For BESS, I have to model regionally. I have to model the solar and wind installations, and I have to model the best share, i.e. the take-up of those renewables space. And you begin to get an idea why every analyst has a different view of demand in the market. It really is an outstandingly complex market, and that's why people have very, very different views as to what demand is.
if I can make one comment on that, so UBS has been in the press a lot with another update, to their forecasts for prices, but that was basically on kind of supply cuts. But I was on a site visit last year. I think it was to Sayona or Winsome, and I spoke with the Australian UBS analyst, and I had asked him about their research, which was negative for like 2 years, and they had done really great work on the demand side for EVs, the EV teardowns, if any of you remember reading those. So they modeled the EV market really well, and I just asked him about, and Iola Hughes was on here, but she's no longer listening in, and Rodney had outlier bullish, BESS views, and they basically said they didn't really, they haven't done like a teardown on BESS, and he acknowledged that, UBS's, demand on the BESS side was weak. Right. So I don't know that that's changed much in the past year. I haven't seen any UBS BESS demand analysis, but I think it's widely, and maybe YJ, you're on the buy side and receive a lot of sell side research. I think a lot of people have modeled well EVs, but they haven't modeled well BESS, and that explains a lot of the difference. I think even Albemarle had a very, one quarter to the next changed very significantly, how much they, were forecasting on BESS. So YJ, just last thought there. And then there was a speaker here that just kind of came in and then it came out. Mick Grauer, if you want to come back in, we'll take your question. I guess what YJ, just any comment on the variability of BESS forecasts from the sell side?
Wow, it's a huge range right now. Nobody's, as far as I know, and to be honest, I don't get a huge amount of research. But to my understanding, not many people are forecasting above a terawatt hour in 2030. In fact, I think, was it Fast? Yeah, it was the Fast Market analyst Walter, who had a 800 gigawatt hour forecast during a conference, and I think that was already on the high side for most of the sell side. And if you look at Albemarle's latest estimate, well, what they included for BESS in their demand assumption, it looked really low. So I think there's a lot of room for this number to go up from the sell side analysts, and it will be more than sufficient to tip their model into deficit. That I think is for sure.
I'll just interject and say that one of the reasons the sell side is getting it wrong on BESS is that their renewable installation forecasts are way too low. So renewable sell side renewables analysts, and in fact a lot of the consultants, have got it wrong on renewables installations for like 4 of the last 5 years. They've been way too low. So I think that's another reason why the sell side is getting it really wrong on BESS.
Yeah, and I read, I think it was a UBS report some time ago as well, where they discussed the levelized cost of electricity from multiple generation sources and compared it to batteries. And I was really puzzled to read their calculation of the LCOE for batteries being a lot higher than the conventional generation. That's just not true. I suspect they might have been using way too low a number for the life cycle of the battery. So instead of today BYD and CATL are happy to guarantee you 8 to 10 years on the battery, and that means that they are confident that it's going to run for 12 to 15, which is exactly the LFP life cycle capability today, right? And so I think if we put in those much larger life cycle numbers into the LCOE calculation, it will come down. The cost per kilowatt hour calculation is going to come down so much, it's going to look a lot cheaper than the analysts originally thought. And that would definitely prompt them to push their adoption numbers up.
Okay. I'm going to shout out and invite one more person if you're interested. David Mostu Nesbitt, who we've had some very insightful discussions after your visit to China and at Fast Markets. If you want to impart some of your wisdom, I'd invite you to speak. And while I wait to see if you take me up on that that bait. I think, Matt, you're working on, we haven't even talked about kind of like conventional brines in South America. And also we touched on Brazil a bit, but these are, you know, and Western Australia only a little bit. I mean, so I'm thinking about, you know, Galan Lithium, Lithium Argentina, NOAA Lithium, you know, Sigma, Lithium Ionic, Atlas, and then in Western Australia, companies like Wildcat, you know, Core, we talked a little bit about. You know, these are all kind of conventional stories. Um, you know, I would love to just talk about stocks. Oh, there is David. He did agree to speak. So, David, let Matt think about what I just said. But meantime, David, we welcome your comments. David, why don't you introduce who you are and what research you've done into lithium and any thoughts that you could share?
Sure. Yeah. So can you hear me okay?
Yeah, perfectly.
Okay. Well, just to introduce everybody, I'm a retail investor in the space who got really interested in it basically through the gateway drug, as I say, of Tesla, and interest and curiosity around where batteries were going. And then as I got deeper into battery science and the supply chain, lithium became what was the most sort of obvious and digestible area. And I've spent a number of years trying to figure that out. I'm really curious about the science of both batteries and then the supply chain. And so the DLE space became of particular interest because there was a lot of science that you could read up on that was kind of core based science done by researchers. And so I spent a lot of time reading that and trying to understand better the pros and cons of each of the DLE technologies, of which there are many, many, and still more being developed and tested. And so knowing that China had done the earliest development on a commercial basis of that, in Shanghai, I got really interested in trying to talk to those companies. And last summer, through connections I have and family friends who are Chinese, I was able to spend a while in China and visit some of these companies and get a feel for where they were at in the further expansion within China of resources, and then also in potential international application, especially in the lithium triangle, but then also potentially in oil field brines and such. So that's the area within lithium that I feel like I know the most. And I would say sort of unfortunate for me in terms of research. I do generally agree with everybody else's who has mentioned DLE on this, is that the commercialization of it, while still, I think, promising, is out on a time frame that is probably not hugely applicable to the next cycle, assuming that we sort of experience a fairly normal cycle. I think most of the DLE promise is going to be out in the 10-ish years, you know, to really scaling enough to make a meaningful impact. I think there's going to be a lot of promising developments in the next cycle because the money is going to start flowing potentially back to these research projects and this development. And then you've got big pocket players, like everybody has noted, in the oil and gas and some skill sets that apply. But I think that's kind of my take within that realm. And like others have mentioned, I think spodumene is going to be the big focus within the next cycle as far as patching any quick needs for supply.
Okay, interesting. Yeah, I wonder, and I don't disagree with that. Like America is taking a lead here, and America doesn't have a lot of spodumene deposits in the country, right? They have these alternatives, and and the Trump administration is very oily, and when I look at America, I see Arkansas just getting an enormous amount of attention. So I just wonder, like, will the government, if they do pick winners, will there be politically influenced kind of decisions that are made to help mitigate that, right? Because the Trump is not, I don't think, going to write a big check to Quebec hard rock stories. So like there's politics, in this, and some people, commented on Lithium Americas wouldn't have otherwise gotten funded without the government. That's true, but they do get funded, right? And that's very expandable, and so politics could play into this. I don't know. And do you have any opinion on that politically, David? This could be a big morass, so I don't want to spend too much time on politics. But what do you think about that as an American, looking at the landscape?
Well, I think the tea leaves do indicate there's interest in the current administration through the investment in MP, for instance, and in general commentary and discussion around supply chains of minerals and rare earths and stuff. I think that does indicate that they could open their checkbooks. I was coming at it and looking at it from the technological side, and money thrown at it technologically, I think, can only advance time frames so much, especially when you look at companies that already have enough free cash to invest in these sorts of things. It's pretty opaque right now what exactly is happening, for instance, with Exxon and such in the smackover, but with what Standard Lithium is doing, for instance, and then like Schlumberger does, was at Fast Markets and does talk about it. You read between the lines, and where they're at technologically, I think, still has a series of steps of scale up and proving to go, and that's can't be rushed just through a bazooka of money pointed at it. It's technological in nature and needs to be de-risked. And so I think that the interest in the US is really wise from the US national security interest, and should happen, because there needs to be investment through the bottom of the next cycle in these continued technologies the way the Chinese have been. But I don't think it's going to technologically make a significant difference in production when you look at the timeframes I was mentioning.
Okay, and the final comment on that is that you spent a lot of time in China looking at the DLE tech there, and I heard like Sun Resin was far advanced, etc. But your takeaway was not that, like, if anybody could quickly expand, and technologically prove, it should be the Chinese. But your sense is that hasn't happened yet.
Yeah, I mean, I think there's so many moving parts in this. There's the technological front, and then there's the geopolitical front, right? There's less and less interest in Western companies to work with Chinese partners because of the optics of that. So that can influence whether or not these Chinese companies have success finding partners outside of China. And then on a technological basis, I think the Chinese company, especially Sun Resin, is the most advanced, has the most knowledge base and experience, and the potential to make it apply to other resources. But they still, with each resource, have to go through that bespoke process of tuning it, because the impurity profiles differ so much from resource to resource, and then the heterogeneity of the actual brine and how you draw from the various portions of the resource, from in the most case in the lithium triangle of these salt lake deposits, to get stable, homogeneous flow into your DLE is there's a lot of research and a lot of modeling and a lot of stuff that has to happen before you want to press go on a, you know, many hundred to maybe billion plus capex, you know, bill. And so I think there's just a lot of little things like that that all come together to complicate the pacing on these projects, especially when you look at a cycle, you know, the next cycle and getting supply in the midst of that.
Okay, and then one more question on DLE is, and this gets to what SE Insights was arguing. You know, the future, the Solar Futuro, right, of SQM seems like it needs to be DLE, and SQM. I've mentioned before, as much as people lament China lepidolite and African spodumene is causing this oversupply, it has been SQM's relentless conventional solar expansion that has negatively influenced price, but they're not going to be able to expand conventionally and you know, as they have in the past. But if they were able to get recoveries, you know, from the 30s to the 70s, that, you know, that would be huge. So do you have any view on um, the likelihood of that? You know, where is SQM, which has not historically been, you know, super technologically savvy or perceived to be having, you know, some cutting edge technology. I mean, they say it, and they've tested, you know, 15, 20, 50 different, you know, DLE technologies. In your research, do you have any insights into SQM's DLE capability?
Just a little bit. I would say, like you, the fact that they've been testing so many and that they've been making equity investments from time to time in some of these DLE technology developers says to me that they're clearly interested and see the benefit. I think when Lithium Argentina announced that Ganfeng has been working on a solvent-based DLE technology, and they're building quite a sizable, I think it's 5,000 tons per annum demonstration plant that they're going to be installing here. Like that, to me, speaks to the point that you're making, which is these operations, these large evaporative operations that are getting these 40%-ish, you know, extraction rates, that the potential to piggyback within there and boost the efficiency and not have to deal with the difficulties of pure DLE, where you're trying to draw lower ppm brine that's also not homogeneous, like I was talking about before. In the case of these ponds, one of the major benefits is you homogenize your brine by by temperature, by pH, by removing certain things and certain through reagents. For instance, you might be able to get to a input to your DLE that is far more homogeneous and stable, and then in doing that, you then can boost your recovery rates and maximize the efficiency on the DLE. So I do think that's where some of the most interesting potential lies. I'm watching definitely Lithium Argentina carefully on that, because I think Ganfeng has really deep lithium processing knowledge, not as much in brines, but with Mariana and what they're doing with Lithium Argentina, they're obviously building that. And I think there's a potential that they could be one of the more important unlockers of that side. As far as SQM themselves, I don't, other than seeing what they're doing, and I've talked a little bit with some of their staff, but no one who's technical has been technical enough to really dive into it. I do think that they're looking at that hard, and probably will progressively pull some of that off, you know, over the next number of years.
All right. Thanks for that. Really appreciate it, David, because I know we invited Daniel Rao as well here to participate, but he's done a fair bit of work on the DLE. So Matt, again, it's now past 2 hours, but we still have 85 people listening. Let's just wrap up, go around the world, talk about Lithium Argentina and NOAA and Galan. By the way, NOAA and Galan both attracted an investment from Clean Elements. The same investor invested $10 and $20 million. We invited Amir to speak, but he couldn't make it. But a high net worth family office out of Israel has made a contrarian bet at the bottom of the market on 2 high grade conventional brines in Argentina, of which it's very scarce. It used to be a few years ago, everybody wanted to come into Argentina. A lot of them got kind of picked off. But Matt, you're working on a note about conventional brines. If you could talk about that, give the audience a preview, and then let's switch to Brazil and the plays there, and then finally like kind of core lithium and and Wildcat as within the context of Western Australian developers.
So yeah, I mean, I think it's very interesting. I mean, if I look at the lithium market this year, Rio Tinto has obviously come on and it's made 2 acquisitions in Chile and brine, salar brine assets. POSCO's in for Lithium South, again a salar brine asset, targeting conventional salar brine, no DLE impact. And I look, globally, there's vanishingly few salar brine projects out there that have grades that are viable for non-DLE extraction and production of lithium. And what amazes me is they trade at a huge discount to the hard rock assets. And obviously the thing about salar brine that we're seeing, I mean, there's lots of speculation in the market that Rio bought Arcadium for its brine assets and the optionality of those brine assets. I mean, the point about brines, as we've seen, over the last couple of years from SQM, from Albemarle, is that they are extraordinarily low cost. And, you're going all the way to lithium carbonate. You don't have to convert it further along, or you don't have to convert most of it further along. And you could have operating costs around $6, $7, $8 a kilo, depending on what your royalty exposure is. And obviously that is profitable through the cycle, even in the down cycle. And I sit there and I see these assets trading at this sort of valuations, maybe a quarter, maybe 25% discount to hard rock assets, in some cases 90% discount to hard rock assets. And I sort of scratch my head and I wonder why are these assets trading at such huge discount to hard rock assets, when from the point of view of incentive prices, something that Chris Robb was mentioning on the podcast recently, these assets are viable to develop at current lithium prices, even though a lot of hard rock assets and sedimentary assets and DLE assets aren't. So I mean, that's really my contention, why for the vanishingly small number of brine assets that can make money through the cycle, or can be developed and make money through the cycle, why are they trading at such a huge discount to the hard rock assets out there? And I don't really have an answer to that question. Obviously, to some extent, some people would suggest, well, you've got Argentina political risk, but people seem unconcerned about that in other assets. And beyond that, I don't really see a lot of risk factors in there. So yeah, for me, these assets look very, very materially undervalued in the market at the moment.
Awesome. I agree. And that's why I own Lithium Argentina and bought Galan not that long ago. And, we hold NOAA Lithium shares as well. We also own, or I do, Sigma. What are your thoughts on Sigma and Lithium Ionic? Atlas, just the Brazil, you know,
Yeah.
and again, the
So,
Western
so
Australian names I mentioned.
I should caution that I do own Lithium Ionic and Sigma shares, and I also own Lithium Argentina shares. So yeah, I mean, from my point of view, I think the issue about sort of the Brazilian assets, and again, it sort of comes back to this capex opex thing that I talked about earlier, particularly around sort of DMS and flotation. And I referred to Sigma as a low cost producer, and it's a low cost producer because it uses DMS only, and it gets pretty reasonable recoveries of that DMS on a 10mm grind size in an area with low cost electricity. It doesn't have to use any other reagents, and it has developed infrastructure, and basically it can put material into China at a major discount to what a lot of other hard rock producers in the world can put material into China at. And that makes it one of the 2 or 3 lowest hard rock lowest cost hard rock assets in the world. So from my point of view, you know, when you look at assets, when, should we say, you're closer to the trough in the market than you are to the peak, you want to be investing in low cost assets. And obviously I talked about the brines earlier, and for me, you know, if I'm investing, I want to be exposed to low cost hard rock assets as well. So that's why I really like Sigma. And the Brazilian development assets, they benefit from the same advantages. You know, large spodumene crystals, similar mineralogy, quite clean material, infrastructure, low power costs. A lot of these assets are suitable for DMS only as well. You know, there's a reason why Pilbara bought Latin Resources. And there's a reason why, you know, these assets look very interesting to outsiders. So yeah, I mean, I think the only thing obviously to be aware of when you look at assets is just, you know, check what the thicknesses of the pegmatites are, what the you know, the angle of dipping is, and the depth of the resources. And obviously, you know, if an asset is underground or partially underground, then it's probably going to have slightly higher cost than an open cost operation. And if the pegmatite is thinner, then potentially it's going to have slightly higher costs in terms of capex and opex, because you're going to have to put in ore sorting and things like that. So, you know, just to be aware of when you do your DD. But yeah, for the most part, certainly the capex and opex for these Brazilian assets looks a lot cheaper. And I think the other thing that nobody's really talking about at the moment with Brazil, which for me is very, very important. If I look at Brazil as a mining jurisdiction, a little bit more broader than the lithium market, Brazil has lithium, it has cobalt, it has nickel, it has phosphate rock, fertilizer, and it has manganese, and it has graphite. Brazil has everything you would need for a battery supply chain, and it also has low cost clean power. So if I wanted to build, for instance, a cathode plant, a pecan plant, even a battery plant in Brazil, I've got everything from the raw material point of view that I would need to do that. And obviously, if you are producing these materials in Brazil and not shipping them to China, you are shipping them to Brazil, then that's a really totally different kettle of fish in terms of operating costs. We're hearing a lot now that BYD is shipping a lot of cars to Brazil. It's actually building an auto plant in Brazil. Brazilian EV sales growth is really taking off. And in fact, you could set up Brazil as a factory really for the whole of Latin America for EVs, potentially for BESS. So I think that Brazil's got a lot to offer that perhaps many other countries don't really.
Great. And Western Australia, you know, which has been, you know, doesn't have this conversion conundrum, you know, in that they can sell to China, or to the extent that they can. What do you think? You know, we talked about core a little bit, and from a capital intensity point of view, you know, brownfield should be easier than a than a greenfield, and then you have Wildcat and obviously Pilbara and Liontown, IGO, Minres. They get attention as producers, but the next development assets. What do you think? You've commented somewhat negatively, Matt, not that long ago about Western Australia being high end of the cost curve. But yeah, could you update your thoughts on that? And do you have any opinion on
I mean, I
those
guess
other two
my
projects?
caveat is, as a global investor, I can invest in assets anywhere in the world. And if I look at valuations in Western Australia, for the most part, they are higher than they are, for assets elsewhere in the world that maybe aren't ASX listed. So I think that's the one of the trade-offs. Both of those assets that you mentioned, both Wildcat and Core, they both benefit from infrastructure advantages. And I think one of the key things about spodumene is it is I'm going to call it a fully bulk material, but it is a semi-bulk material. And if that's the case, then sort of infrastructure is very, very important. And the fact that, Core is very close to the port, and so is Wildcat. I mean, I think that's a huge advantage there. So, I think there are some definite advantages for those assets. I think that it's Core is a DMS only asset. We talked earlier about the early stage issues with the open pit mine, which perhaps wasn't the best resource that they could have mined. I think for the restart, they're primarily focusing on the underground resources, which are thicker, higher grade probably. So I think there's positives for Core, and I think for Wildcat they've just published that PFS. It's going to be an open pit and underground development. I think if memory serves, it's a whole of mine float. Is that correct, Howard?
I'm sorry, what
Is a whole of mine
which
float?
one was that?
Wildcat?
I'm not sure.
Yeah.
Rodney,
It
do you
is.
know?
Yeah, I can confirm it is.
Yeah.
Took a
It
look
is.
at it. Yeah.
Yeah, so it's a whole of mine float like Liontown. So that's going to probably have slightly higher costs because you're going to have to grind to a finer level. But yeah, and an open pit underground, but the first stage of development is primarily open pit. So we'll see both. Well, certainly Wildcat is pretty early stage. So we'll get some more detail as and when they do more detailed bulk sampling at the asset.
Great. I think with that, we're going to wrap up. I'll just make one more comment. Sarah Maricel of Rio Tinto, commented on your LinkedIn post, Matt. Thanks for sharing. Just a note that Galaxy is DMS only. There is the possibility to add a flotation circuit in the future, but it's not planned for the current 2 million ton phase. So good to hear from her. And to the point I made earlier, Paul Graves speaking at the Benchmark conference, I expect to hear later this year about maybe more plans from Rio in Quebec to replicate their aluminum activity that could really make a big difference and influence the Quebec narrative. Anyhow, thanks to everybody who listened in. This was recorded, I believe. I have to check. I think I correctly did that, and then we will repackage this as a Rockstock channel interview. So again, thanks for everybody listening in for so long. And the max number we had here was 96. When I remember 2 years ago, we had maybe 140, 150 people. So it demonstrates that I think there's still a lot of scope for investors to still come back to lithium. They're distracted maybe by gold and uranium and a few other things, but I'll take it as a positive sign that we had as many as we had. But there's a lot of people, I think, still to come into the space. So with that, optimistic thought, I will sign off. Thanks, Rodney and Matt, and all the other speakers, Tom, Chris, David, Wayne, and others who participated in this discussion. See you later.